All right, I think we're live now. I can see all of our participants slowly joining. Welcome everyone to the Market Insights Virtual Summit for Q2 2021. My name is Jeremiah and I will be your MC for today. Obviously, if you guys have been joining us yesterday as well, you recognize our faces. We have Alex joining us from MarketWise as well. Alex, you want to say hi?
Hello, good morning, everyone.
Alex obviously runs the sales and marketing from MarketWise Asia, and he's also in charge of basically most of the emails that you guys have been receiving, the program structure. So Alex is the man to go to if you have any questions, right?
Yes. So I've been the one sending you guys all the email and everything, everything in the Telegram chat, everything. So yeah, so you at least you know how I look like in real life. Okay, so by the way, how many of you actually attended the sessions yesterday? All right, just type me in the chat box so that we know you were with us yesterday.
Quite a few. Jeanette, Martin, Amanda, Chester.
All right, quite a few. Thank you for your response. I hope you guys enjoyed the sessions yesterday. And by the way, we have also sent you guys the day one replay, and we sent it to your email already, and also in the Telegram channel. So if you didn't receive the replay email, remember to check your spam folder just in case the email landed there. All right.
That's right. And then I guess, Alex, maybe people might have a question for recording, right? So all of the sessions today will also be recorded and the recording will also be sent to them, right?
Yes, all the sessions will be recorded today, and we will send again. We'll send you all the replays once we process the video, and we'll send to you again. And the replays will be available for about 2 days after the event has ended. So do not worry if you cannot, you miss some of the sessions later. We will send you the replay once the summit is over.
Got it. Okay, so today we have a jam-packed lineup of speakers, a lot of different sessions similar to yesterday. It's also going to be happening from 10 a.m., which is in about 2 minutes, until about 5:30 p.m. later in the evening. So I'm definitely very excited for that. And with that, maybe let's kick off the introduction to the event, Alex.
Yep, sure. Go ahead.
Okay, so let me go ahead and share the screen. All right. So before we start, I think I see some of the attendees still streaming in. So, Alex, just wanted to ask you, which was your favorite session from yesterday?
Oh, in fact, all of them. I learned quite a few from. By the way, I learned quite a bit from all the speakers. And by the way, Rainer gives some very interesting screener tips how to screen for certain stocks. I thought that was very useful to me. So give me some ideas how I can refine my own stock screening better, because I myself is also a trader and then also trade stocks as well. So I think, so if you really missed Rainer's session yesterday, do remember to check out his replay. And by the way, Rainer is the most followed trader in Singapore, and he also has a YouTube subscribers, 1 million YouTube subscribers. That's a lot, man. So he's the guy if you want to learn trading. So do check out his replays if you miss him.
Yep, definitely. And I mean, I think same for me as well, Alex. Like I think Rainer's one was quite interesting because he was really trying to simplify a lot of the concepts, as well as Don's presentation on technology stocks was also quite interesting, especially if you have any exposure in tech stocks. So yeah, I think that was really day one. Can imagine how beneficial that was for myself and for Alex. You can only imagine what day two is going to be like.
Yep.
Okay, so today is going to be a jam-packed session, and obviously you can see over here, this is for Q2. We will be talking about opportunities and challenges ahead. This is an event that's proudly organized by MarketWise Asia, and we also want to take this time to thank our media partners, BK Forex, Swim Trade, Systematic Trader, as well as Terra Seed. So thank you to all of our partners that have made this event possible. Next, one of the things that I just want to encourage everyone to do is to join our Facebook page, our Facebook group, and also our Telegram channel. Now, on these two channels, there are a lot of information that we constantly share, information about our upcoming events, information about exclusive promotions, discounts, Alex also does a lot of live streaming once in a while as well. So all this information can be found on those channels, which Alex has just shared in the chat. So please, I would highly encourage you to join those channels to get the latest information that we have. Okay. Now, next up, one of our sponsors for this event is actually IG Asia, and we actually are working with them to have an exclusive promotion where you can actually receive $100 in credit when you open a new account with IG. Now, all you need to do is to be eligible for this is make sure that you have a Singapore residential address, and also you will need to fund the account with at least $500 and execute at least one trade in 30 days, okay? And once you've done that, you'll get your $100 free credit as well as a physical copy of the Trader's Blueprint, which is a very, very interesting and effective book for people that want to start out with their trading journey, okay? So that's one IG promotion that I wanted to share with you. Alex would have also shared that link in the chat. So just click on the link and you'll be able to find more details about that, okay? Now, next up is something that's very exciting. Obviously, we are talking about Q2 Market Insights Virtual Summit, but we also have an upcoming event, which is our Market Insights Virtual Summit for July, which is happening on the 10th of July and the 11th of July. Now, on this event, we will be covering a trend-following mindset, and we are inviting some of the most prestigious speakers from all around the world. We will be featuring Tom Basso, who is the founder of Trendstat Capital Management. And also we have Michael Covell, who is the founder of following.com. So we do have...
Last one, huh? Say last one.
We do have these following, obviously, if you heard that, it's just a small technical difficulty, but don't worry about that. So upcoming event, we have Tom Basso and we also have Michael Covell joining us for July Market Insights Virtual Summit. And all you need to do is sign up using the link. Alex would have also shared the link to the sign up in the Zoom chat. So just head on there and you can find more information about that. I'll highly encourage you to join us in July because a lot of great insights. And if you enjoyed the insights so far, then you can expect the same for the upcoming event. Okay, and with that, we're almost about ready to get started with our first session. But before we do that, just want to make sure that everyone has the best experience today. So all I need you to do is to make sure that if you're joining from your desktop or laptop, that will be the best and optimal experience. Make sure that you have stable Wi-Fi, and you definitely will have questions throughout the stream. So if you have any questions for the speaker, do remember to put your questions in the Q&A. So if you go to your Zoom page, and at the bottom of the page, you'll find a Q&A button. You can click on that and you can add any questions that you might have for the speaker, okay? And then if there are any other general responses, please keep that in the chat tab. And that's how our speaker will be able to find the questions that you guys are asking, okay? And so with that, I would like to now introduce our upcoming speaker for the first session. And it is none other than Kathy Lien. And Kathy is the Managing Director and for FX Strategy at BK Asset Management. And she's also the co-founder of BK Forex. Now, she's graduated from New York University's Stern School of Business at the age of 18. Can you imagine that? And after that, she immediately started working on Wall Street. And that has helped her to accumulate over 13 years of experience in the financial markets with a specific focus on G20 currencies. And her career is a stellar career, having started at JP Morgan, where she started working on interbank FX trading, as well as where she is right now. Her experience comprises of options, interest rate derivatives, bonds, equities, futures, the list goes on. So truly, truly someone that has a wealth of experience. And Kathy, today, she will be talking about picking tops and bottoms that can be easy if you know how to do it right. So with that, let me introduce and welcome Kathy. Kathy, are you there?
Yes. Hi, everyone. How are you?
I think they're doing quite well. It is morning time for us. First of all, it is evening for you right now, Kathy. Is that right?
Yes, it's 10 o'clock at night. My kids are in bed, so you've got my undivided attention.
Well, I wanna thank you for joining us so late tonight, and We're all really excited to hear from you. And I'm not going to hold you up anymore. I think they are waiting to hear for your entire session. So with that, I'm going to pass the time over to you. Okay, Kathy?
Fabulous. Let me go ahead and share my screen. And as Jeremiah had just said, if you got questions, please feel free to type them in the chat, in the Q&A box. I'm not going to have the Q&A box open because I'm going to be laser focused on my slides. But once we finish our talk, I'll go back, I'll look at the Q&A, and we'll go through all of your questions. So as you're having questions along the way, feel free to ask them. And hold on one second. Let me just try to mute some of this stuff here. Anyway, it doesn't matter. You can't, it's on a different screen. Okay, so as I said, thank you so much for having me. And today our topic is picking tops and bottoms can be easy. Picking tops and bottoms is a strategy that is very, very popular, and there's a lot to talk about. Before I begin, I want to share with you this disclaimer that says trading Forex carries a high level of risk and may not be suitable for all investors. So for those of you that are watching this as a replay, make sure that you're aware of the risks that you're taking, because any leveraged instrument can be risky. So I've been trading currency since 1999. And as Jeremiah said, it's been a very, very long time. But what's been interesting in my career is that, many of you may see me or have seen me on CNBC, and you may be reading my research on a daily basis at bkassetmanagement.com. But at heart, I'm a trader first and an analyst second. I may talk about where I think the euro is headed in 1 month or 2 month time, or even 1 week ahead. But at the end of the day, what really matters to me is the trading opportunities that we have. What I really spend my day on, aside from staying on top of the global news, is looking at strategies and trading strategies based upon the overall dynamic. Whenever I trade, and if you're familiar with my trading style or attended any of my talks or read anything I've written ever, you'll know that I believe that there are 3 ingredients in a perfect trade. I am one of the few traders that really fuse fundamentals with technicals and sentiment. Every single one of my trades, my best trades, are the ones where each one of these components are taken into consideration, and basically each one of these components give me the check mark for taking the trade. So if fundamentals, technicals, and sentiment are on my side, that creates the best opportunities for trading. And I think this is one of the most important things to learn, because regardless of whether you're you're looking to picking tops and bottoms, or you're a breakout trader or a trend trader, I think that it's important to basically be aware of the bigger picture, to try to find trades where the fundamental story is on your side. To give you a really good example, for most of the month of March, the euro was falling consistently. And there was really good reasons for that, because Europe was lagging the US in terms of vaccine rollout. They had instituted new restrictions, and some countries had moved into a 3rd wave lockdown. Whereas here in the US, restrictions are being rolled back, on a daily basis by countries. And all of that impacts the bigger picture of how a country is going to perform going forward. So if you think about it on a fundamentals basis, for the past month, and probably longer than that, the story was really anti-euros, pro-dollar. We also had a really sharp rise in US Treasury yields. That was a really big story, which is very pro-dollar. So the fundamental story was to sell euros against the US dollar. So, during that whole month, there were opportunities to buy, there were opportunities to sell, but you would have had, much more relaxed, easygoing, fluid trades if you looked for opportunities to sell the euro versus trying to buy it, because the fundamental backdrop was to sell euros. And sentiment and how investors and markets and stocks were performing also affected, the way we look at markets on a day-to-day basis. So, in the past, if you've attended any of my last 2 webinars with MarketWise, we did touch on how to look at things from a fundamental basis. And I just want to stress that regardless of, what we're talking about today, this is that the best trades, even when we're picking tops and bottoms, is when, the fundamentals, the biggest story, are on our side. So when it comes to trading, there are a few ways to trade. There is basically high probability or high profit. And the difference here is that high profit is basically what most of us are taught when we're learning to trade for the very first time. High profit basically means that we want to have the 2-to-1, 3-to-1, 4-to-1 risk reward ratios, which may sound wonderful, but in reality, it's sometimes, especially in Forex, very difficult to achieve. Because imagine that you're a day trader and you think to yourself, what is a reasonable stop for a day trade? You can type in yourself in the chat and give a suggestion, but most people will say maybe 20 to 30 pips is the minimum a stop you should have for a intraday day trade. So what does that mean? What does that mean for your reward? That means that on a 2-to-1, which is this perfect or minimally perfect high profit scenario, you're looking for 40 to 60 pips of profits on an intraday basis. And some currencies only move 40 to 60 pips on a 24-hour basis, not in that perfect slice of time that you're trying to trade. So I have found, through my many decades of trading currencies, that what really works and what I think is the most effective way to trade is what I called high probability, high accuracy. My motto, for trading is always focused on high probability, trying to get 70 to 80% winners, maybe at 1-to-1 risk reward. And while that may not seem great, it's much more psychologically reinforcing when you have winner, and you have 6 or 7 consecutive winners, and then 1 loser followed by 2 or 3 additional winners, than to have loser until you wait for that one big winner. And what happens if that one big winner comes when you were called out for work that day, or it was overnight, or you some other situation where you were off the desk and missed the trade, you're driving. So that's the worst case scenario, in my opinion. I think that the best way and the smartest way to trade, to thrive in this market, is high accuracy, high probability. So I'm going to show you a number of trading strategies today, and almost all of the trading strategies will be high accuracy, high probability. And that's what I do every single day, which is practice high accuracy, high probability trading. So when it comes to trading, the type of profits, there's a couple of things to be aware of. The type of profits that you're looking for, and we're going to talk about when it's smart to do single versus multiple entries, when we should be looking at what type of risk rewards we should be looking at, because what may seem ideal may also not seem realistic. We'll also talk about the best and worst currencies to pick tops and bottoms, and the right strategies to use. So when it comes to trading, we talked about 2 general kind of styles of trading: high probability, high accuracy. When we drill it down, there are 3 main technical trading styles. One of them is following the trend. Another is timing the breakout. And the third one is picking tops and bottoms. And for today's discussion, we're going to be focusing on picking tops and bottoms. But regardless of which style that you're looking at, following the trend, timing the breakout, picking tops and bottoms, applying the fundamental analysis layer is extremely important. Meaning that if you know that the Eurozone is going to underperform because their economies are locked down, there's no way that their data is going to be improving in the next month, and it's probably going to be deteriorating. Whereas the US, fewer and fewer restrictions are happening in US states, more and more people are getting vaccinated, that data is going to get better and better. That it is much better in all of these 3 styles of trading to look for opportunities to sell the euros than buy euros. So you want fundamentals on your side, and that's applicable for any of these three trading styles. So picking tops and bottoms can be looked at in many different ways. And it's also known as fading the trends, trading the reversals, range trading, trading against the crowd, or running into the fire and not away from it. The reason why I'm saying that is because when you are picking a top or bottom, you're basically running into the fire because the currency pair is falling. There's probably good reasons why it's falling. And you're just headed right in there thinking, I'm going to stick my hand out, in this hot fire and buy this with the hopes that it's going to reverse, which, could happen, but can be risky as well. But the point of our discussion is that picking tops and bottoms can be a lot easier with the right strategies. And that's what I hope to share with you today. So why is picking tops and bottoms so popular? Well, picking tops and bottoms is popular, and it's, a style that a lot of us come to the Forex market wanting to do. And the reason for that is because we are humans, and humans love to think like contrarians. We love to think that we're smarter than everyone else, that, the Dow, in the midst of COVID, US stocks, the Dow, the NASDAQ could not go and hit record highs on a daily basis while this terrible pandemic is raging. And guess what happened? That's exactly what it did. But plenty of money was lost trying to pick those tops. And it's because we love as humans to think that we're smarter than everyone else. But, it's not just that, of course. It's also because many people who come, especially to the Forex market, come from a equity trading background. So you've traded stocks, you've invested in stocks, and with stocks, you have PE ratios, price to earning ratios. So there really is such a thing as overbought, oversold, overvalued, undervalued. And unless, things are really amiss, you don't have things get exceptionally undervalued, exceptionally overvalued without some type of correction. And so stocks and shares are much more naturally range bound than currencies, because currencies are confidence measures, and confidence measures, usually you're getting, usually a country does better, or it does worse. It doesn't get to do better, worse. And so as a result, currencies tend to be much more trending than they are ranging. And it takes some time to realize that. But still, many people approach the market looking for opportunities to pick tops and bottoms because, we love to think like contrarians. And also because many technical indicators that we learn are based on mean reversion, based on, things getting really extended and coming back to more sane levels. Things like RSI, the relative strength index, stochastics, Bollinger Bands, all of that are things we're so used to using and putting on our charts. And also because even the hedge funds do it. One of the most popular strategies for hedge funds is mean reversion, and basically, selling vol, buying vol, because they think that, when things get, really overstretched in one direction or the other, they have to come back to normal. And that is why picking tops and bottoms is so popular. So if we want to do this right, we've got to have the right strategies and, understand some of the right environments for picking tops and bottoms. So let's kick off with, a couple of tips for picking tops and bottoms. So the first tip is to know your trading style. Are you looking to position trade, or are you looking to scalp? Are you looking to trade ranges, or are you looking to trade reversals? All of that plays a very important role in determining what type of strategy you should be using. Because when it comes to range trading, if you're looking to trade ranges, then you really should be looking to scalp, because ranges in the Forex market, are relatively narrow for the most part. And with range trading, usually, you don't really have the 100, 200 pip opportunities. The opportunities and the profit potentials are much smaller. And that's different from reversal trading. Reversal trading is when moves get very, very overextended, and you are looking for those multi-100-point reversals. And depending upon whether you've got the appetite for a shorter term range trade or a longer term reversal trade, that's the way you have to design your trading strategy. So tactics for range trading. Well, first off, when it comes to range trading, before we look at, I've got a whole bunch of strategies to share with you, but I want to set the foundation for looking at the markets. So when it comes to range trading, before we even look at strategies, on the most fundamental basis, on the most basic level, what we're trying to do is we're trying to fade highs and lows. And these are not significant highs and lows. These are kind of bounded highs and lows. And we want to make sure that the bounded highs and lows ranges are as close as possible. And when you've identified those bounded highs and lows for a currency pair, with range trading, what can be pretty fruitful is multiple entry, multiple exit, adding to your positions up to the range limits, because it's rarely a situation where the currency pair is going to go to the top of the range exactly. Sometimes it goes to 3/4 of the range, or a little bit more than that. And so what you could do is you could have multiple entries up to the range limits. And with range trading, because we're trading bounded levels, what works with range trading is shorter targets, so more scalping-like targets, tighter stops, and basically exiting, unlike the entry where you may be entering at multiple price points. Usually single exit is usually the smartest way to go with range trading. Ranges are perfect for day traders. We see ranges on an intraday basis, we see ranges on a daily basis, but ranges are really perfect for intraday trading. So there are a few range trading strategies that you could consider. The first one, and one of my favorite, is called the extreme fade. So with the extreme fade, and if you've ever read my books or followed what I've done or attended any of my other presentations, you will know that I love Bollinger Bands. I've been trading with Bollinger Bands for 2 decades now, and they've served me well, which is why I still use them. Whenever you put Bollinger Bands in your charts, the defaults are always 20 period 2 standard deviation. And in this case, we're adding the 20 period 3 standard deviation. And since this is day trading, we're going to look at using this on 15-minute charts. So before we get to the examples, I want to show you how I set up the Bollinger Bands. Can someone just confirm with me that you can put in the chat box my chart? Can someone say yes to chart in the chat box? Perfect. Okay, no, now I have a yes and no. Do you see? Okay, there's a lot more yeses, so I'm going to assume that yes, you can see my chart. Okay, great. So
you mean the trading view chart?
What I'm going to do to make this easier, I'm going to stop the screen share and I'm going to reshare my chart.
We can't see your trading view chart. You're talking about that.
Okay, so all of you should see my chart now.
Yes, you can see now.
And so let me just double check the chat box. Yes, wonderful. Okay, so we're going to put on the Bollinger Bands. This is a standard trading view chart, completely free, broker neutral. So everyone has access to this. So we're going to type in Bollinger Bands, and we're just going to look at the standard Bollinger Band. Whenever you add Bollinger Bands on your charts, you get 3 lines. And the 3 lines are basically the outside bands and then the basis. So what we're going to do to make this chart look like my chart is that we're going to get rid of the basis. We're going to get rid of the background. And we're going to go to black for both. Whoops, black for both. A lot of people oftentimes ask me how I set up my Bollinger Bands. And this is the way you do it. So now we got the 20 period 2 standard deviation. Now we're going to add on another set of Bollinger Bands. And we are going to adjust this to the 20 period. You see, we click on inputs, standard deviation, change this to 3. And then we go to style, get rid of the basis again, get rid of the background, change these to black. And voila, your charts look like my charts. And so here, so now let's look at the rules. Well, let's stay on the chart because I don't want to flip back and forth. I'll walk you through the rules on the chart, and then we'll look at them again on the slides. So it's very simple. 15-minute charts, what you want to do is you want to look for the currency pair to close at or below the 3rd standard deviation Bollinger Band. So you want to imagine this to be like a rubber band. And the currency pair has gotten so extreme that it, in this case, drops and closes at the 2nd standard deviation Bollinger Band. And then you, just because it does that, does not mean that you take the trade, because we have to respect the fact that currencies are trending instruments. And so it can keep on going. I mean, it could be any of these scenarios. I mean, these scenarios didn't hit the 3rd standard deviation Bollinger Band, but it could. And so what we want to do is want to wait. We want to wait for the currency pair to reverse first, close above the 2nd standard deviation Bollinger Band, and that's when you go long. You go long and you'll see the risk parameters there, but in this trade, you can see that's a nice point for a reversal. In this chart here, we have no other examples, but let's take a look over here. So this is another great example. Here, we've closed at or above the 3rd standard deviation, so the outside line, then you wait for it, and this is why you want to wait. It just rallies. You wait for it to close below the 1st standard deviation Bollinger Band, which is exactly what you see over here. So we close below the 1st standard deviation Bollinger Band, and that's when you sell. This is the euro. Here's another example. We close above the 3rd standard deviation Bollinger Band, closes here, and then you sell. And here's another example over here in the euro dollar. It closes below the 3rd standard deviation. You wait for it to close above the 2nd standard deviation. That's when you buy. And once again, a really nice turn trade, a really nice and perfectly priced way of picking tops and bottoms. So let's get back to the slides. Give me 1 second to stop my share. And let me pull my slide back up and let me reshare it. Okay, so here we go. So here, what you see is that we went through the trading rules. So the first step, just to put these, kind of in written form so you can understand them. You'll want to watch for the currency pair to close at or beyond the 3rd standard deviation Bollinger Band. So that's exactly, if you're looking at this chart, you can see the arrow pointing at the point where it closes at or above, in this case, the 3rd standard deviation Bollinger Band. Then you wait, and this is the most important part. You wait for the pair to close below the 2nd standard deviation Bollinger Band. And in this case, that's what happens here. And it's just the arrow showing you, the point at which it closed above the 3rd standard deviation and the point at which we closed below the 2nd standard deviation. For a long trade, you would buy the open of this next candle, and this example is a short trade. So at the open of the next 15-minute candle, you sell. So we sell here, where it listed there, stop, swing high or swing low. Now, since we're trading 15-minute charts, usually it's about 15 to 20 pips, but every trade is different. So we have a stop here of 12 pips. So you target 1 times risk. You have a couple options here. You can either target 1 times risk and exit half of the position when it moves 1 times in your favor, 1 to 1, and then trail your stop on the rest of the position. Or you could just go for 2 to 1 risk reward. I mean, it's short enough that it should be okay. So in this case, 1 times risk hits, and we exit out of the trade. And in this example, it only goes to 1 times risk. In this example here, it hits the first target and it goes to the second. So it goes to 1 times risk and 2 times risk. So, you never know what's going to be the case. So I always generally prefer having 2 lots on and basically closing half of the position when it goes to 1 times risk, and then trailing my stop on the remainder of the position. In this example here, we get to the first target and the second target. If you trailed your stop, you probably would have gotten a bit more. Now, I'm not looking at the questions. I'm assuming that some of you may ask, how do I trail my stop? And there's a whole bunch of different ways. One good way, I think, would be to, first of all, move to break even once your first target is hit if you want, and then trail your stop by the 2 bar low or high, meaning that in this, let's say we're looking at this chart where the currency pair is rallying, 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 and it's rallying. What you would do is that you would set the trailing stop at the low, I guess, of the last 2 candles. So you would have to move it there dynamically. I mean, if you really wanted, you could also use the trailing stop feature that your broker offers and do maybe a 10-15 point stop. But the 2 bar high and low would be the technically significant stop. And this strategy is a great way to pick short-term tops and bottoms, but in my experience, it's really, really powerful with the euro dollar. And just start with the euro dollar first. I think you'll like it quite a bit. The next short-term scalping-like range trading strategy for picking tops and bottoms, because picking tops and bottoms, like I said, can be easy with the right strategies on your side, is something I call the New York fade. And this strategy is really great for those of you that are in Asia, especially those of you that are relatively early risers. So the way the strategy works is, first, we're looking at 1-hour charts. And what you want to look for is you want to look for a strong one-way move during the New York session. And that is defined by 7 a.m. to 4 p.m. New York time. So 7 p.m. to 4 a.m. your time. So those are the points that you want to highlight on your chart when you wake up. And then when that happens, ideally, so let's say we're looking for a very strong one-way move. That means that we're looking for a very strong rally during the New York session or a very significant decline. And if it's a decline, you want to see it close near the day's lows. So of course, there's a whole bunch of ways that you could do this. The first way is to draw vertical lines illustrating the 7 a.m. and the 4 p.m. mark. There is a free indicator on TradingView called Session that will basically demarcate the trading sessions for you, where you could just look at it visually, which I think is much easier. So the red is the New York session. And for those of you that just, well, maybe I'll do this later. I can show you how to apply it on live charts later, but the indicator is just called Session. And so the red is the New York session. The blue is the Asia session. It's the only things you need to focus on. The green is obviously Europe, but we're focusing on the New York and Asia session. And so the way this strategy works is you want to look first. The first rule is you want to look for a strong one-way move during the New York session. And you will see in these charts my arrows. And these arrows show you days which we have strong one-way moves. It's not consolidative. It's basically one very sharp, steep decline in each of these scenarios where the currency pair, dollar yen in this case, ends the day near its lows. So when you see that happen, that's when you buy at the open of the Asia session. Now, 5 p.m., which is 5 a.m. for Singapore, some of you may be awake, some of you won't. If you take a look at the charts, sometimes it doesn't move that much by 7. I mean, you can also automate it, maybe, but sometimes it doesn't really move that much, and you may still have quite a bit of potential. So we said that our stop is at 15 and 20 pips. So I want you to, and we'll look at this based upon your hours to see, how much loss potential there is. But first, you see a very sharp sell-off in my first arrow at the New York session. So at 5 p.m., we are going long in the first example, dollar yen at 108.48. So let's say the stop is 20 pips, 108.28. And if you woke up at 7, your entry looks like would have been 57 or so. And that's okay, because the big jump afterwards went from 57 all the way up to looks like about 95. So if we just take 20 101 on this, which is high accuracy, high probability, you still, even if you woke up at 7 o'clock and you took the trade, it still would have been a high accuracy, high probability trade, still would have worked in your favor for enough pips. So next example, sharp sell-off, we buy at 108.38. If you came in at 7, you would have bought it at 108.45 and it went up to 108.80. So 20 and 30 pips easy for you during that time. And then the last example, 108, this is all really recent examples. My chart ended the day that at the time that I took this snapshot. 108.51, and you can see in each of these examples, the end of the New York session, 4 o'clock, is pretty much the low. So 108.51, if you got in at 7 a.m., if you're a late riser, I guess 7 a.m. is not really a late riser, but let's say you woke up at 7 a.m. You would have gotten in at 108.55, so only like 4 pips less than me, not a really big deal. And this one powered up to 108.15. Even if you woke up at 7:38, that would have been a slightly worse price in all the scenarios, but it's still winning trades all around. Target 1 times risk, 15, 20 pips, but you can see all those examples. If you got in at 5, you would have gotten a lot more than 20 pips, but if you got into 7, 20 and 30 pips, you still were able to get that. So here are the examples with the exits, the entry and the exits, showing you, how nice these trades turned out and how well they worked out. And here are further examples. This one this one is where we had a move, we closed at the day's low. This is a nice 20 pip. And then this is another one. This is another New York fade. The second red one didn't really apply because it's really just consolidated. The third red one, which is where my plus 15 is, that one we had a very strong rally and it closed at the high, and the New York fade worked again. And more examples of, the trade kind of in action and working as well as it should. This has a loser in it, and that's okay, because we had a winner, loser, winner, and we saw countless other winners before. And this is the type of odds that we want. We can never expect a strategy to work 100% of the time. The 70-80% accuracy is what we want. And that's what the New York fade delivers to our day traders. 10 pips is obviously the highest accuracy. 15 pips has about 85% accuracy in this trade. 20 pips, 75% accuracy. But I think in real trading, I've had better experience than that. So those are your day trading strategies. Now let's look at, or your day trading range trading strategies to be more specific, ways to pick tops and bottoms on an intraday basis. That is different from reversal trading. At the very beginning, we talked about how reversal trading is picking those 100 pip moves versus, moves on an intraday basis, which cannot be 100 pips. So tactics for trading reversals. Now, before we get into that, it's important to understand some reversal principles. Reversals are triggered off of significant prices, and they're usually off of significant price reversals or caused by sentiment change. And typically, unlike range trading, when we're trading these tightly bound levels where we have multiple entries, single exit, with reversal trading, what works oftentimes is single entry, multiple exits, and what works better, I guess, is single entry, multiple exits, because when we are in making these reversals, we have the opportunity to pick a significant reversal. And so we may be able to capture a really, really big move that, that can be in our favor. So tiering out allows us to maximize the profit potential. So tiered exits, tight stops, and this is where you can use those ideal risk reward lessons that you're taught, where this is where the 2-to-1, 3-to-1 risk reward works much better for trading reversals than for trading ranges. And reversals are perfect for swing trading. Reversals basically are for those of you that are looking to pick bigger moves and not looking to stay in the trade for 10, 15 pips. So I've brought with you, so I had 2 day trading strategies I shared with you. I'm going to share with you 2 swing or reversal strategies. The first one is to use the Bollinger Bands again to pick turns. And I already showed you how to apply the Bollinger Bands. And we talked about how whenever you put Bollinger Bands in your charts, you always get the default 20 period 2 standard deviation. And so that's what you see here. And so we're going to use this on 4-hour charts. And what we want to do is we want to look, so we have our 20 period 2 standard deviation. We add with the extreme fade, the day trading strategy, we use the 20 period 2 standard deviation and the 20 period 3 standard deviation, because those are, that's what you need for a shorter term basis, a bigger extreme move. For swing trading, what we're looking at is the 20 period 2 standard deviation and the 20 period 1 standard deviation. And here we're looking at 4-hour charts. So what we want to do is we want to look for close above the first standard deviation. So that's where my arrows are showing. In the first example to your left, you'll see that the currency pair is first trading in the 1-2 band on the downside. So it's trading on the 1-2 band on the downside, you wait. That is the secret to picking tops and bottoms, which is having patience. Patience is really the secret to making picking tops and bottoms easy. Now, of course, being patient is not always easy, but that is really the key. So we wait for the currency pair to close above the first standard deviation Bollinger Band. And when it closes above the first standard deviation Bollinger Band, that's when we go long. And so we see that in the first example. In the second example, all these arrows would be points at which the currency pair, euro dollar, closes above the first standard deviation Bollinger Band. Once it closes above the first standard deviation Bollinger Band, you want to buy. So we're buying at, all of these different levels are the buy points. So whenever it closes above the first standard deviation, we're buying 120.04, 120.74, 120.79, and 119.05. Those are all legitimate buy signals. Then your stop is 40 pips, and you close half of the position when it's moved to 40 pips or the first standard deviation Bollinger Band on the other side, whichever happens. And then you trail your stop. You trail your stop by 20 pips, hoping to get a bigger move, hoping to capture a much more bigger move in our favor. So here we go long at 120.04 and we exit at 120.45. And euro dollar actually in the first trade goes all the way up to 121.40. before it tops out. The second example, 120.74, we exit at 121.22, but the eventual move is all the way up to 122.40 before it peaks. The third one, what we got is what we got, 120.79, and it closes at it touched the first standard deviation Bollinger Band. We exited at 121.09. And the last one, I think that was just, we basically exited half of the position when it touched the first standard deviation Bollinger Band, which in this case was very modest. But 2 of them went really far. One of them just got our profit target. The second 2 just got our profit target. Regardless, 4 out of 4 winning trades. That's the high accuracy, high probability strategies that we want to see, and the ones that I like to follow. On the short side, the rules are reverse. We want to look for a close below the first standard deviation Bollinger Band. So these are all the places at which we get sell signals, where previously, in this case, we were in the 1-2 band, the upside. We wait for it to close below the first standard deviation Bollinger Band, and that's when we sell. So in this chart, we have 1, 2, 3, 4, 5 sell signals. And you wait for the close below the first standard deviation Bollinger Band, and we short at the next candle. Stop 40 to 60 pips, same trade management rules. Close half when it moves by amount we risk, or it touches the first standard deviation Bollinger Band on the other side, whichever sooner, and we trail our stop. So in this chart, I've already kind of outlined the trades for you. We've got 1, 2, 3, 4, 5, 6 trades. 6 trades, 2 losers, 4 winners, and it doesn't seem like it's, it seems like it's a small edge, but if we include the buy signals on the bottom in this chart for pound dollar, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades, 3 of which were losers, and basically 8 were winners over the course of 20 trading days for a total profit of 240 pips. So I think any of us would be happy with these odds, these high probability, high accuracy trading odds. And the second strategy that I want to share with you is called the double break strategy. The double break strategy is a strategy that basically gets you into the real move and of the day when it happens. So what we want to do is it's kind of like the New York fade, but from a different perspective. We want to identify the 12 o'clock to the 4 o'clock New York range. And we want to identify the high and low. So in this case, the red is and you get this trading view indicator. I think the publisher is Junior FX Addict, and it's called Sessions. The red in this case is the 12 to 4 period, and the purple is the 4 to 3. So what we want to see is look for the break of the New York session low in Asia. So in this case, that's the first rule. That's not the only rule. So we want to look for the New York break. So we look at where my arrow is. To the left of the chart, you will see that I have drawn a horizontal line showing the high in the red area, which is the 12 to 4 range, showing the low in the red area, which is 12 to 4 range. There's 2 horizontal lines. The first thing we want to see a break of the range low. But patience, once again, picking tops and bottoms can be easy with just a little bit of patience. So we wait, in this case, for a second break. But the second break must be a new low. It can just be a few pips. It doesn't matter. So we wait for the second break, and it must be a new low. So my first arrow is the first break. Second arrow is the second break. So the second arrow is the second break. That's when we get in. We sell 2 to 3 pips below the prior low. And you can see we sell there 77.44 in the Aussie dollar, and it becomes your stop is 30 pips. Your target is 20-25 pips, slightly negative risk reward, but high accuracy, high probability. You're still winning with 70-80% accuracy per trade. And then in this case, you can see we sell at 77.44. This should not say sell, it should say stop up here, 77.74. That's a typo. And then the bottoms just say exit 77.24. I just duplicated it. But regardless, you can see target hit quite quickly, and it actually goes, more than that. Here's another example here. I've demarcated the horizontal lines for the high and low of that range, and the high and low of the red area. The first arrow points to the first break. The second arrow points to the second time it breaks. Now, you're not waiting for the candle to close. You're just waiting for a break 2 to 3 pips below the prior low. So you can set this as a entry order and a stop entry order. So we sell here 77.75, and you can see our 25 pip target was hit a few hours later, and it actually went a little bit more beyond that as well. And a couple more examples here. We would have bought at 1930 in the euro dollar, and we would have exited, pretty much the next candle in the first example. The second example, the trade took 2 hours, but eventually exited. And the third example, same story, 3 out of 3 winners. That's exactly the type of high accuracy, high probability odds that we want to see. So that's 4 different ways to pick tops and bottoms. And, there's a lot of different ways that you can use to pick tops and bottoms. And, just to go through some simple candlestick patterns that you can use that can also help you pick tops and bottoms and can be quite fruitful. Things that we like to look at are, this is kind of like what we were looking at, the double break strategy. First top, second top, neckline, head and shoulders break. And that's what we see, in this chart. We had a really big head and shoulders break, 1, 2, 3, 3 peaks, followed by the break. That became a very nice move. Shooting stars can also be very powerful reversal signals. When you see a shooting star in a chart, it can be a precursor to a very big reversal move lower. Dojis, same story. Dojis are very strong reversal signals. You see my 3 dojis on this chart here. Evening stars, also very powerful reversal signals. And I actually like evening stars quite a bit because you've got 2 up candles, the second one being very narrow, and the third one's a 3 candle formation, confirming the reversal. Once again, takes patience, but when you see that, it can be a very, very powerful move lower. So now let's take a look at the best currencies for picking tops and bottoms. Basically, the best currencies for picking tops and bottoms are the currencies that in many ways have less of a trending behavior than some of the other ones. So dollar yen is a really fabulous currency for picking tops and bottoms. Same story with dollar CAD, Swiss yen, Euro Swiss, Euro pound, Aussie Kiwi. A lot of these are also countries that have a lot of correlation with each other, like Australia, the Australian dollar, the Australian economy is very much correlated with the New Zealand economy. The Eurozone is very much correlated with the UK, or better way to say it, the UK is correlated to the Eurozone. There's, of course, periods of divergence, like now, where UK is doing a fabulous job with vaccine rollout, like more than 50% of their adult population is vaccinated. And so that's going to go a very long way in their recovery. Whereas in Europe, Germany, I think it's 10%, maybe less, that's received the first dose. And so right now we're in a period of divergence, but in the grand scheme of things, Euro pound is typically much more of a currency that is great for picking tops and bottoms, because when we have like a risk on day, Euro and pound will both rally, or we have a risk off day, Euro and pound will both sell off. So it tends to have more range trading behavior than trending. Same story with the euro and the Swiss franc. Swiss franc and the Japanese yen, those are both safe haven currencies. And so they are much more suited for picking tops and bottoms. Worst currencies for picking tops and bottoms are the ones that are super trending. Pound dollar is terrible for picking tops and bottoms on a macro basis. Now it can work, of course, and we've seen plenty of my strategies that I've shown you work on pound dollar, especially the euro dollar, but they tend to be, but in general though, you tend to have a bit more risk trying to pick tops and bottoms in pound dollar, any of the yen crosses, which can be much more trending, euro, or some of the highly volatile euro crosses like euro Aussie and euro Kiwi. They're much more suited for trend trading than picking tops and bottoms, although they can be quite good for reversal trading. So I've shared with you 4 strategies for picking tops and bottoms. There are so many more ways that you can do it. Now, of course, the key and the secret to picking tops and bottoms is basically patience, which is probably one of the hardest things to do, but that's basically what it really requires. That's 4 strategies for picking tops and bottoms. There's also a number of other ways that you can pick tops and bottoms, and that's why I want to take a moment to tell you a little bit about this course that we have, which shares with you not 1, not 2, but 12 strategies for picking tops and bottoms. So if you like some of the strategies that you learned today and you want to learn more, and you want to get more ideas for effective, high accuracy, high probability ways for picking tops and bottoms, I highly encourage you to take a look at this course, because in this course, it's a 4-hour on-demand masterclass. And in this on-demand masterclass, you will learn 12 strategies for picking tops and bottoms, strategies from myself, strategies from my colleague, Boris Schlotzberg. And on top of that, you would get 3 automated trading robots, 3 MT4 EAs that you can plug and play and use for those strategies. All of these strategies follow my motto of high accuracy, high probability. I hope you got a little taste of that in the examples that I gave you today. You know, the odds that we saw in some of the charts that we have, 3 out of 3, 4 out of 4. Of course, we cannot expect 100% accuracy, but that's what we're seeing. At minimum, though, we can expect 70 to 80% accuracy with these high probability, high accuracy trading strategies, because that's what we do. That's what we're known for. Strategy number 1 is, well, I'll give you an example or a taste of some of the strategies that are in this course. Strategy number 1 is called the Big Kahuna. It's a strategy that helps you catch a turn just as it happens and to jump on a trend that could explode for hundreds of pips. Strategy number 2 of the 12 in this course is called the Sweet Spot of Swing. It is our favorite way to time turns targeting 50 to 200 pips per trade. Strategy number 3 is called the Big Probability Trade. It's a statistically significant strategy for fading grossly overextended moves. Strategy number 4 is called Day Trader's Delight. It is a high probability strategy for grabbing gains after the London close every day. Strategy number 5 is called the Canadian Capture. It is a strategy that gives you an intelligent way to trade dollar CAD with 73% accuracy. And strategy number 6 is our most sophisticated day trading strategy for scalping tops and bottoms. This is only 6 of the 12 strategies that are in this masterclass for picking tops and bottoms. There's a lot in here, and there's so much more than what I just mentioned. You will learn 12 powerful trading strategies, the one thing great traders know about picking tops and bottoms. Boris's day trading setup for grabbing multiple 20 pip gains throughout the course of the day. My strategy that picks euro turns with greater than 70% accuracy. The best times for mean reversion and the best toe hold for reversals, and when to avoid picking tops and bottoms, which can be very, very useful in of itself. So you'll learn to grab multiple 20 pip gains using our rubber band strategy and walk away with the confidence to fade big and small moves. So there's a lot that you're going to learn in this valuable course. And with our partnership with MarketWise, we're giving all of you a very, very special offer. This masterclass, you can save $100 for the next 3 days if you use the promo code MW. And the bit.ly link is there. Bit.ly BK Tops is what you want to use. And I invite you to check it out, because if you like what you learned today in the 4 strategies I shared with you, that's basically the high accuracy, high probability, high quality lessons that you can expect in this masterclass that has my strategies as well as strategies from my colleague, Boris Schlotzberg. So with that, I'd like to open up the floor to questions. I can see a whole bunch of questions here. And let's see if we can get to them. So my first question is, are some of these strategies applicable to stock trading? And the answer is yes. Now, of course, we trade these primarily on currencies, but a lot of the rubber band strategies are very useful for stock trading. The Asia Open, Asia New York Fade one obviously is not, because it's a completely different animal than stock trading, but the 4-hour turn baby turn also works very, very well with stocks. What time session is good for using extreme fade for euro dollar? Well, I mean, basically what really is interesting about this sort of stuff is that oftentimes, if you have experience in trading, you'll know that fades oftentimes will happen right around the London close, because you oftentimes will have a really big move into the London close and then reversal. But I don't think it really matters because at the end of the day, the setup is rare for extreme fade. And when it happens, it is powerful in of itself. Your methods only apply to Forex, not stocks. Some of them do, some of them don't. Like I said, the turn baby turn works very well for indices as well as commodities, along with the extreme fade. But the Asia fade, for example, obviously is very specific Forex focus. Now, the 12 strategies for picking tops and bottoms runs the gamut. Do the range? So all the questions seem to be about whether it works for other instruments. And so hopefully I answered your questions. Can you set your entry and exit prices? Yeah, absolutely. You can set them in your platform once the trade opens. And a lot of these strategies can be applied to commodities, gold and oil and indices. Individual shares are trickier because, as I said, they have their own personalities. Wow, a lot of you stock traders, the same question, can I use this for stocks? And the Bollinger Bands themselves are very, very powerful for stocks. And so I definitely encourage you to look at them because they can be, very, very valuable when we actually do see some of the setups. I mean, I'll show you a chart. Let me try to share with you my chart. Hold on. Just give me 1 second. I'm just going to try to share with you and stop sharing. Hold on. No, stop sharing. And then we reshare. Hold on. I think you see my chart. This is the Dow Jones 4-hour chart with let's pop in our 20 period. 1 standard deviation Bollinger Band. Actually have it set up over here already. And you can see here that once we close below the first standard deviation Bollinger Band, really nice reversal trade. Here's a really nice reversal trade. This one didn't quite make it, but in this environment here where the bands are really, really tight, obviously that indicates a very strong range trading mode. And when they're so tight, they're not really that effective because they're pretty much right at the same level. The wider they are, the better they are. Like here's another really good trade. This one didn't work out, but this one worked out. This one worked out. And that's basically the odds that we want to see. Oil, same story. If we start from the left-hand side of the chart, turn upwards, we go to the Bollinger Band the other side. Turn downwards, we go to the Bollinger Band the other side. You wait for it to close above the first standard deviation Bollinger Band. It touches the other side. Same thing here. This did not work out, but that's okay. This one did not go all the way, but that's okay because this one worked out and this one worked out. So I think we had 1 winner, 2 winner, 3 winner, 4 winner, 1 loser, 2 losers. So we basically had 6 winners maybe and 2 losers, which is basically the odds that you want to see.
Hi, Kathy.
Other questions?
I think there was one gentleman
do
asking
we wait
about.
for the end of the candle? Yes, we wait for the candle close. And the only one that did not wait for the candle close was the double break strategy. The course, the picking tops and bottoms course, let me just stop sharing so I can share that again, is a on-demand course. So you can watch it anytime you want, and you can rewatch it for as long as you would like as well. Can you use, with some of the course, do you have Telegram, which you use to share your live trades and tips? I do have Telegram, which I use to share my live trades and tips. It is not included in this on-demand course. It's our Trading Signals membership, which is completely different. Do I use any other indicators besides Bollinger Bands for confirm entry and exit? Very good question. Yes, sometimes I like to add in my moving averages to make sure that I have moving average clearance, meaning that I'm not selling into moving average support or buying into moving average resistance. What's your best advice for position sizing for this strategy? I mean, it's basically what you feel comfortable with. And unfortunately, I don't know which strategy you're talking about. We talked about 4 different strategies. I think that you start with a size that you're comfortable with and adjust based upon that. So may I know more about the robots? If you click on that link, it will tell you all about the robots that are included as well. And it's 3 robots for 3 of the trading strategies. Is it advisable to go long on Forex trading and the time frame? There are plenty of opportunities to go long in Forex trading. And if you're asking whether it is advisable to take long-term trades, there are oftentimes very attractive long-term trades. And you can see that in some of our chart examples. But you just have to be careful, because with those long-term trades, you could have, moves against you, which can be significant as well. So hopefully I answered all of your questions. And as I said, if you enjoyed the types of strategies that I shared with you today, this course, I think you'll find very valuable, because we've got 12 different ways to pick tops and bottoms. And so there's a lot of great ideas there from myself as well as Boris. So if you have any other questions, feel free to fire away. Otherwise, thank you for spending this time with me, and I hope you enjoyed the presentation.
All right, thank you so much, Kathy. First of all, I want to thank you for spending the time with the amazing presentation. I think a lot of
hold on one second. I'm sorry, what did you say?
Okay, so she can't hear us just now. Okay. Yeah, so I think, Kathy, so I think there's one gentleman who asked, do you look at a higher time frame when you place all these trades, or just one single time frame?
Yeah, that's a good question. I do always, it's what I started talking about in the beginning, which is the more check marks that you have on your side, the better the trade. So if the fundamental story is on your side, if the higher time frames show that, for example, if we're looking to sell, the higher time frames show that we're below all of the key major moving averages, that also increases the accuracy of your trade and makes it higher probability.
All right. So, yep. So thank you, Kathy, for your sharing. I posted the link in the chat also. You should be able to see it. All right. So by the way, Kathy, is the course on demand, or will there be live sessions for your course?
It's an on-demand course. It's 4 hours worth of content, 12 strategies, 3 MT4 EAs. All
right. So if you guys are trading Forex, and I've been trading myself also, so please give me some trade ideas using incorporate some of these Kathy's strategies as well. All right. So this is pretty interesting. If you guys are already trading Forex interested, just use the coupon code MW and you get a USD $100 off. All right, please head to the link below. Jeremiah, over to you.
All right, thank you so much, Kathy and Alex. Once again, as I was mentioning just now, I think it was a productive session for most of our viewers. I think a lot of us have learned a thing or two about FX trading and how we can apply that to other form of asset classes. And with that, I think we're just about time to talk about our next session. Our next session is starting at 11:30, and that's going to be delivered by Terence, who is the head of the business development and education at IG Asia. And he will be talking about how to take advantage of the market safely with a risk mindset. And for that, I think, Alex, if you could just share the link, the Zoom link to the next room. Obviously, if you guys should know that we close this Zoom room. And for all of our other attendees to move on to the next Zoom room for the other session.
All right, I just posted the room in the chat. All right, so once again, just repeat, we won't be staying in this room. Just head over to the next room later at about 11:30 a.m. All right, we still have some time. All right, just grab a coffee or tea and have some breakfast before we move on to the next session.
All right, and with that, thank you so much, guys. You guys can start leaving the room, and we'll see you at the next room at 11:30.
All right, so I'll end this session right now. I will see you guys again soon. All right, bye-bye.
Bye.